Okay, well, welcome everyone. This is how I am making money in 2022 and how you can too. I'm going to go through a strategic approach to trading successfully regardless of the market environment. And I am your host, Michele Schneider, though most people in the business know me as Mish. So let's go through a little bit of today's agenda. Uh, Tell you a little bit about myself. Some of you probably know who I am, some of you may not. So I'll just give you a brief overview of my history in the whole business. I want to run through my trading strategy. It's very systematic, very repeatable, very consistent. And then I'm going to end today with my actual trade results. I'm going to show you the 2022 portfolio of closed trades that we have so far. And I'm even going to show you all of our current positions, our open positions. And the reason why is A, to prove that you can make money and that we are making money, and two, to show you how we stuck with a certain macro theme, how we got there, and how we use the process to make these trades work out so well. So here's a little bit about my story. I started out in life as a special education teacher. I grew up in a very low middle class background in Queens, New York. And my parents thought that I should become a teacher because that was their experience for somebody who enjoyed school as much as I did. And hence I became not only a teacher, but I was always been fascinated on not only how people learn, but the different brain, the atypical brain. And so that's why I did my special education and I stayed in that business for a long time. And I still have my hand a little bit in it. I'm very passionate about inclusion, which basically means taking kids with sometimes very significant disabilities and making sure they get in the general curriculum as much as possible, which actually is a little bit apropos to what I do here, even in finance, because a lot of people have very big issues when it comes to trading, whether it be emotional, whether it be they lack an actual system. It brings up things that actually in some ways almost makes them have, in essence, special needs, and that's what I try to fulfill. And I started out by writing this book called Plant Your Money Tree, A Guide to Growing Your Wealth. It did become a bestseller, both in the audio version and in the print version, in investing and in retirement. And essentially, some of the principles that I'm going to go through with you today are in the book. Also, in the last couple of years, because I've been in the business for so long, I've become a little bit of a media personality. I'm on Fox every week, Bloomberg, Yahoo Finance, CNBC, and a lot more media. And actually, if you go to our website at marketgauge.com and you hit the top tab, media, you can see some of those clips. I also often post them on Twitter, LinkedIn, Facebook, so kind of hard to miss if you're looking for it. I've been running my own trading service with Market Gauge since 2010, and I don't like to lose money, and happily I have not had one losing year to date. And then I got involved with Real Vision a few years ago, and they had me come into studio and talk about a particular stock pick in 2018, and it turned out that it won the award for the best trade of the year because it literally was a double. So this has been my life. I love this life. I love teaching, and I certainly love trading. For me, it was busting out of basically a socioeconomic bracket that I was never going to bust out of unless I got into trading. And that's what makes trading so great, is that it really is equal opportunity. It doesn't care who you are, what you are, where you're from. It really gives everybody the same equal opportunity. In some ways, you can say it's the last bastion of pure capitalism. So once I became in young 20s, I said, I don't like struggling, living hand to mouth. I need to make more money. And I was very fortunate because I did meet somebody who was trading on the floor in New York, Commodities Exchange. who was another woman, by the way. And she brought me down there to just sort of introduce me to what she did. And within a very short period of time, I became one of the first women who had my own seat on the New York Commodities Exchange. I started out in coffee, sugar, cocoa, working for Conti Commodities, which was part of Continental Grain. I went on to Comex, which is the metals. And I spent most of my years in NYMEX, which is the New York Mercantile Exchange, which is the oil exchange, oil, natural gas, heating oil. So that's been a hot topic lately. And then years later, once the floor, which by the way is now completely obsolete, went away, I also started working with Market Gauge, which was founded by my husband, Keith Schneider, and Jeff Bish. And this really gave me the opportunity to take what I learned from the floor, which I spent 13 years on, along with some other real systematic approaches, basically Market Gauge's signature risk managed process. So essentially what I do is I kind of break it down. I mean, one of the things I learned from the floor was you're very aware of the macro. You're very aware of what's going on. I mean, one thing commodities tells you, and that's something we're really learning this year, aren't we, is that once raw materials become in short supply, it affects everything. So a mega trend is essentially a social, could be a social movement like social media is a mega trend, political, like it certainly could be, I would say more geopolitical in this case, like the war that's going on, economic, certainly, whether we're going through a period like 2008, where we had a complete collapse and recession, to the great boom market that we had up until really this year. It could be environmental, because obviously when environmental conditions wreak havoc, whether it be storms like Katrina or typhoons or drought, these mega trends can last for months or they can last for years. So I like to look at the overall trends of what's going on throughout the world in each one of these venues. And then from there, I start to gather my ideas. And that's one of the things that I do a lot on media, because that's what they're having me on for, is they want to know, Mish, what's happening and what's going to happen? How do we make money in that situation? So what I love about these mega trends is they literally are like humans to me, in that they can start as little teeny infants. So you get a little mega trend that just gets started. If I want to use one as an example, let's go back to social media, which up until about 20 years ago didn't even exist. And you take places like Facebook and Twitter and now TikTok and all these things, they've grown to the point now where they went from infancy to toddler to adolescence. And I would say now, if we're looking at a trend like social media, really we're sort of like in adulthood. What would be an example of a mega trend that's kind of in old age? I'd probably say video gaming. That really got started in 2004 is really when it got going. And I'd say it's an old age, but it's still always evolving, because from video gaming, of course, we're getting into virtual reality or whatever. So the point is that you want to look at these mega trends and you want to be able to identify in the global markets what is maybe just coming up that's undervalued, what is already kind of in momentum and has more, and what may be kind of dead and something that you want to avoid, or if you like to go short, something you might want to short. So that's the first thing that's always in my mind. I'm always looking around. And a great source, by the way, for seeing megatrends that are emerging is if you have kids, because let's talk about a new megatrend, of course, would be cryptocurrency. Not so new, Bitcoin's 17 years old, but nonetheless, it feels like it's just brand new because it's just hitting the mainstream. So with that, I also, because of my special ed background, I like to think visually of things, and I came up with an economic modern family. And I'm just going to show you this quickly. Essentially what I did was I thought about the way the US economy works. And the way it works is that based on GDP, you have industrial manufacturing, you have consumer, you have energy, you have financials, et cetera. And I thought, wow, this is really almost like a family. And I basically decided to make them into a family. So you can see I have 7 characters here. So this is my sister semiconductors, obviously. Oops, sorry about that. What happened here? I just went way, I'm going way the wrong way. Sorry about that. Oh, I'm going the wrong way, Holden. Oh, no, we're past that. Sorry about that, guys. I hit the wrong mouse. So, okay, so then we have semiconductor. Oh, I see. If I click on it, because I'm using this thing, so I can't click. Sister Semiconductors represents chip technology. Actually, I thought of her as a very smart, hip kind of person. And so when I think of Sister Semiconductors, then it really puts a face on the whole industry. Then we have regional banks. I call him my prodigal son, not the big banks, but really basically the small banks like Zion Bank, et cetera, because that really represents how money is flowing within the rural communities of the United States. Then we have Grandpa Russell. He's the grandpa of the whole family. 2,000 small cap stocks. They all are in the United States, mainly in the industrial and manufacturing sector. Then grandma is our retail sector. It could be both e-commerce and brick and mortar. 70% of the GDP comes from consumer. Transportation, which is huge in terms of, obviously, if this is going to be supply side, this is really demand side. Huge to measure, and we're going to talk about that a little bit. And then I had biotechnology, which is really basically pharma and healthcare. And then the newest character, of course, is cryptocurrency. And we're still really trying to ascertain as investors, where does Bitcoin fit into the whole economy? Is it a risk-on asset? Is it an inflation hedge? Is it something that's going to replace banks eventually, fiat currency? So it is definitely evolving. So when I say it's in its infancy, although Bitcoin's been around, the idea of the cryptocurrency space is really for a long time now starting to evolve. Now, I just wanted to show you quickly the charts of, this is the 6 characters together. And I think it's really important because if you want to understand what's happening in the macro right now, I get asked questions all the time, are we going into a recession? And this is really where I like to look at the weekly charts. So here is XRT. This is our granny retail. And actually it closed a little bit higher today. It's 75.24. But you can see if we're looking at a 50-week moving average and a 200-week moving average, it's smack dab in between. We're going to talk about phases in a moment, but essentially telling you now it's in a caution phase on a weekly chart. And my book, by the way, really covers the weekly phases. And I think they're extremely important because people tend to think just too short term. And if you're a day trader, that's great. But if you're trying to make more macro investment decisions, you've got to step back in time frame. And the Russells, which actually were probably some of the first to break down in 2021, just like retail did. I knew at the end of 2021 when I saw retail breaking down, which is my grandma, and grandpa turning down, that even though the SPY and the NASDAQ were making new highs, somebody was wrong. Was it the consumer and the entire economic structure of industrial manufacturing, or was it big growth cap stocks and S&P 500 that, of course, were on the heels of low interest rates or zero interest rates and big corporate buybacks? And I took a guess based on other things, namely oncoming inflation, that these guys were right. And of course, you can see they turned out to be right. This is biotech. Now, biotech is actually under the 200-day moving average. And that's interesting because this is in a distribution phase, not bearish. But this has really broken down. Even with all of the vaccine drugs, people were just not spending money, or I should say companies were not subsidizing pharma companies to do research, and all staff and all type of drug development was based on vaccine, which took a lot of these other drug companies and really put them into a tailspin. Semiconductors was actually one of the last ones to break down under the 50, which makes sense, right? Chip shortage. And then transportation, interestingly enough, was also one of the last ones to break down. And this is why I don't think we're going into a recession, because as of today, actually, IYT closed in the green. And even though we're not back over the 50, what we're seeing here is some major support. But it's also telling me that regardless of high prices, whatever you hear on the talking heads, et cetera, we are still in a situation where there's demand. And the demand obviously comes back from the mere situation that we've been in for 3 years, 2.5 years, which is a total shutdown, to now with COVID behind us. So everything here tells us a story. The one area that is still holding above the 50-week, this actually closed right on it today, is the regional banks, partly because rates are going up and partly because people and the savings rate, although it went down, people are actually still borrowing money to do things like starting businesses or buying homes or doing construction or buying cars, regardless of the higher costs. Now, I wanted to show you Bitcoin independently as the seventh member of my family. And Bitcoin actually, as I'm talking to you, is just a little bit higher than where it shows here. It's like at 39,200. But you can see with this one, there's no 200-day moving average on this chart. This is a 50, and actually this is a weekly chart. This is the 50-week moving average. So when people are bearish or bullish, I think right now we're really basically establishing a base. And if you just wanted to use the phase type of scenario, or you wanted to wait for a major breakout, you could wait for this to clear the 50-week. We think that this 40,000 level, or even the 39 to 40,000 level, is extremely pivotal. The longer it holds, the better it is. That could be a factor of maybe the market's ready to take a little bit of a rally, or it could be some kind of a decoupling. We just don't know that yet. Now, we've got megatrends, we've got the modern family. In the modern family, we can see rotation. Rotation is often a great way to make money. If everybody is out of semiconductors at this point and starts to go back into transportation, let's say, or goes back into transportation and back into semiconductors, but we're still really far behind in biotechnology, that's when we can get a series of stocks to look at within that sector to see what's what. And that's where phases come in. I like to use 6 different phases: bullish, caution, distribution, bearish, recuperation, and accumulation. And in these phases, they work sort of like a cycle, but they don't necessarily have to follow clockwise like you see here. And they're very much associated with emotion. So obviously in bullish phase, everybody gets pretty euphoric. In a bearish phase, everybody goes with despair. But the reason why I put the human emotions on this is because humans' emotions are very short-lived. We tend as human beings to be extremely optimistic, and therefore bearish phases for really a long time haven't lasted very long. Unless you're in Japan, in which case the bearish phase lasted for a very long time. But because generally what happens is hopefulness comes back into the market. So even though we're technically in a bearish phase in 3 out of the 4 indices, believe it or not, the S&P 500 on a phase is still distribution, we could easily find hope back in the market, even with everything horrible going on. And so with these phases, I like to use 2 simple moving averages. I use the 50 and the 200. And the way we look at the phases on the daily or the weekly, so you can use a 5200 daily or 5200 weekly, is how they are lined up related to each other, and then where price fits in. And then I also look at slope. Slope is extremely important because you can have something clearing a major moving average, but if the slope on that moving average is negative, it could tell you it's kind of a false breakout. So obviously we're going to go take a look at charts so you can see how all of this fits in a moment. But on top of that, in my process, I look at what I kind of just mentioned was momentum. Now on the floor, momentum was easy to spot because you could actually feel it. You could feel sort of the lull before the noise. You could see the faces of the other traders. You could see when that momentum was coming in because order flow would start and everything would start to escalate on the floor. It was open outcry. Momentum is not so easy to see when you're sitting and looking at a bunch of screens like we all do now. So we came up with a proprietary indicator at Market Gauge called Real Motion. And Real Motion literally helps you measure momentum. We also use moving averages. We use a series of Bollinger Bands. You'll get to see it in a moment. But essentially, what that does is it tells us right away if the momentum is either in divergence to the price, in simpatico with price. And then if it's in divergence, then we look for a confirmation either in momentum or in price. And when you get both of them lined up together, price breaking out of a phase and momentum breaking out, then you really often have an unbelievable trade. So we like to see whether the momentum is beginning to out or underperform the price. And then that will be the predecessor very often of a longer term change. So if we take gold as an example, which I'm going to show you, you're going to really see a classic signal of that. Now, finally, we have to have some way of understanding risk and reward and also position sizing. And that's where we use an average true range. So an average true range very simply means it's the high, low, and the number between the high and low of any particular instrument on any given day, and we average it over a course of days. Some people like to use 7 days. We like to use 10 days. And basically what we do with this information is that if we know an instrument trades 15 cents a day or trades $14 a day, then everything that we do is based on that range in terms of risk reward. We like to risk basically no more than 2, sometimes 3 times the amount of an average true range for a position, so we know where to stop. If we use that much in terms of risk, then we avoid getting blipped out on a down day potentially. And then we also use it for profit targets. So if we've risked 2 ATRs, we get 2 ATRs, we'll go to no loss stop. And then we start taking off profits based on the multiples. So if we get 4 ATRs, we start taking off, we get 6 ATRs, 8 ATRs, etc. And then once we actually have a certain amount of parabolic move in a particular instrument, then we start using our trailing stop. Finally, we also like to time our way in with an opening range entry. So essentially, what that means is that now we have everything lined up. So let's use the gold as an example, and I'm going to show you a chart. In a megatrend, inflation is coming. In terms of the economic modern family, we're seeing the actual negative impact of inflation in the economic modern family. We also see now that the momentum is starting to change. And we also know what the ATR, what the ranges of gold on any given day on average is. So how do we decide that day to get in? Let's say it's taking out its 50-day moving average. It's been trading below, so it's about to change phase. We make that decision based on an opening range, which comes from our days on the floor. When we were trading on the floor, commodities open month by month. So let's say when I was trading in the crude oil pit, January, February, March, April, May, June, each month would open. Then it would shut for about 30 seconds and then it would reopen. And that first several minutes would be called the opening range. And then when the market reopened, if it went above the high of the opening range or below, generally you'd get follow through. So we took that notion, which is very statistically significant in terms of the fact that a lot of instruments make their range in the first 30 minutes, and then that's where they stay all day. So it's significant if it takes it out or breaks below it. We use a 2, 5, or 30-minute opening range. And basically what that does is help us avoid the noise of something breaking out within the first 10 minutes and then starting to fail. We like for most of our position trades to use a 30-minute. If you're day trading, you might want to use a 2 or a 5-minute. So all of this together with the risk parameters and everything really is what is the basic, and I'm explaining this obviously very quickly, but this is the basis of our strategy. So when you layer in the megatrends, the modern family, the phases, the momentum, the risk war, the opening range, as I just said, you've got a really good winning formula. So with this, before I get to the charts, I want to show you this is absolutely real. This is my closed positions. I decided that I would go back. You can see some of these positions were put on in 2021. Some of these positions were put on in 2022. And I wanted to show you this most authentically because I also wanted to show you that not only have we had tremendous gains, But I stay very relaxed when we have losses. Why? Because of our risk parameters. I always know what my risk is. And I also always know that losses are part of the game, but the whole idea is to control your losses. And with our formula for taking profit targets at certain multiples of ATR, we can catch some really big swings. So if we just go back, this is coffee. You could see with coffee, got in, got out, was a scratch, so be it. The way we do this is the entry date, the price, the percent of the position that we had on, the exit date, the exit price, and then what the return was. So if we just look, what do you notice about my returns? Look at the instruments. We've got VIX. When the market started to go down in January, we started buying VIX. We did it as a more active trade. We did it as a couple of times. I started buying silver. I got into gold. I probed it. My initial return was a small loss. Went back into VIX. Then I started buying Mountain Pass and HUT, which is a miner for Bitcoin, energy, oil, silver, gold. Then also, if you come over here, I had bought wheat in September of 2021, DBA, which is the agricultural ETF, in October of 2021. So some of these I had already started doing. Oil I bought in December, XLE I bought also in September, but the bulk of these I really traded this year. So with MP, even though I started out at the end of February, I got in and I lost some money. Greece, I basically scratched. I bought it. I took a profit target. And then when the market crashed, I got stopped out of the rest. But you can see that I got back into MP 3.7. Today's only 3.10. And so 3 days ago, I bought it back. And within 2 days, I made an 18% return on a piece of it and a 9% return on the piece of it. So essentially, what I really wanted to show you here is that we've had some spectacular returns, although some of these positions were established in 2021, with most of them at 2022. And all of this, none of this is a great mystery. All of this is based on the procedure I just showed you. So now let's go to actual charts. So I wanted to show you the probe that I lost and then the time that I made. And I'm also going to show you my momentum indicator and my moving averages. So this is gold. This is the 200-day moving average. This is the 50-day moving average. Now, sometimes, I'm only human. Sometimes I look at things and I get excited about it. I knew gold was going to go up, but my timing sometimes is a little early. So we bought it here over the 50-day moving average. We added when it cleared the 200-day moving average, but it immediately went down and we exited. That was my first probe. I was wrong. But I don't get discouraged too easily when I know that we're heading into an inflation and a narrative, and I had no idea we'd be heading into a Ukraine-Russia situation. Just based on price alone, I watched this, I was like, I don't trust it, came all the way back down, bought it again, but here's what happened. When I bought it here, the 200 was still above the 50. This is not a bullish phase. A bullish phase is when the 50 is trading above the 200, and we had that golden cross right here. So once we had the golden cross and we came down and we cleared back over these moving averages, this is when I got in. I'm going to show you my 30-minute OR in a moment. We took a pretty tight risk at that point because I didn't want to get chopped up again. Only this time, see, it never broke these lows here. So I stayed with the trade. I actually added because now I was getting encouraged, and I exited again, bought it again. So remember, there were two probes there. There was the first one, the second one. The third probe here, now it gapped up above these moving averages, even though you can see that they flipped again. And I got in and boom, I've already hit a couple of profit targets and I'm still long a tail. Now let's take a look down here, how this matches with momentum. When I bought it here, the momentum was showing that it was already over the 50, the 200-day moving average. So I thought the momentum was showing me that this was going to go up. And I was right for a few days, but it never got through the Bollinger Band and it came all the way back down. So remember now, I left it alone. I didn't even get involved here. Came back in here, kind of now it was the end of the year, getting into the start of 2022. I wanted to be long gold in 2022. Momentum was telling me things were good again, but then we had another fake out. So now I waited here. Momentum was starting to go up. Even though it broke down, it never took out the 200. And now look at where those momentum went. So now that it's coming off, I still have a tail. Obviously, I have a trailing stop, but you can see that I put all of it together. If we take a look here at the 30-minute, this is the day that I use the 30-minute opening range. So each bar is 30 minutes. Here was the first 30 minutes of the day. It did not take out the 30-minute. This was the successful trade, by the way, not the probes. And here you can see that once it took out the 30-minute opening range, I got in, and this was just, you know, easy money, essentially. Let's take a look at another example. In this example, this was the volatility trade. And volatility has been kind of fun to trade. It's very hard to trade, though, because volatility can be well volatile. So to me, this is like the old days in commodities. I kind of like the fact that you can kind of get in, get out, make some quick gains when sometimes within 2 or 3 days, and that's the end of it. And that's kind of what happens. So as we were going into 2022 and I saw volatility was still very low, but remember now the Modern Family was telling me they were already breaking down. I thought at some point we're going to see some kind of a sell-off in the market. So when it cleared the 50-day moving average right here, which is a recuperation phase after being bearish, I got in. And I immediately took profits at a target here. I actually even added here, then I exited, and that was the end of that on this trade. So literally, I went from a buy at around 21. I got out at around 25, 26. I didn't risk very much because I just risked to the low of this day, made some quick change, and I was happy. And I could have done it several times, including here. But at that point now, I was more heavily invested in commodities, as you saw in the closed positions. In the 30-minute chart, again, doesn't mean other days it doesn't take out the 30-minute OR. And if you're day trading, you may want to look at that. But I was looking for a 2-3 day trade. So I waited for this day because it also, remember, cleared the 50. And then it went and cleared over the 30-minute OR. And again, never really looked back. Now let's take a look at silver. Silver, I've also traded in and out. So in this particular silver trade, I bought this while this was still negative. We had a death cross. It was in a bear phase. Everything about this is against what I would normally teach, except I'm going to show you in a moment. We had what was called a mean reversion trade, and that's one of the things we can see with momentum. So if you look down here on the real motion indicator, it broke down under the Bollinger Band, and price, there's a Bollinger Band here we didn't put in, broke down too, came back the next day, and actually not only is a mean reversion trade, which means basically it's overextended to the downside, you can also have a mean reversion trade overextended to the upside. But it also made a new 60+ day low and a reversal trade. To me, a good reversal trade is when you make a new low, the next day you have a strong move up on good volume. And then if you can couple it with a mean reversion, and it fits into my narrative of megatrend because we're going into inflation, silver being so undervalued, that to me could be a home run, which this turned out to be. And I actually held on to this for a while before I took a target, but I took my target here. And then I took another target here, and then I exited the rest. I really wanted to hold on to it. I still made money on the trade. I scratched on the balance. But then I waited. And now look what happened. We have momentum starts to come all the way back down. But look what happens here. As we're not making another new low, and it starts to look interesting to me again, as momentum is now taking out the 50-day moving average, even though the price is well above it. I take another probe here, and once again, goes straight up. Then, of course, we take a target. We wind up getting out again, this time a little better than a scratch, but I'm still really consistent with it. This time I waited for it to actually clear the 50-day moving average. And look what's happening to the slope. As the momentum is improving, so is the slope on the 50. So that's telling me that this is just getting tired on all these sell-offs. So I got in here, I risked real tight to underneath that 50-day moving average, took a target here, sat through all of this, took another target here, and we're still long, a tail in silver. Here's our 30-minute chart. I bought it on the 30-minute OR breakout. Now remember, my stop was under here, so I was not even moved by the fact the next day that it opened up a little lower. I just was very patient with it. And it also had a gap on this day. So I just figured my risk was underneath this gap. If it broke down under the gap, I'd be gone. Now DBA, remember, I bought DBA in 2021. Again, I could see what was happening with food commodities. It started in COVID. So I was all over this. And my first trade I ever made in my entire life was in the sugar pit way back in the day. So I always have an affinity to trading the soft commodities anyway. And DBA is very much made up of soft commodities, coffee, sugar, but it also has an exposure to grains. And a little bit of cocoa in there too. So after this had tested the 50-day moving average a couple of times, once it cleared it one more time, I had a good risk to under here. I got in, I reached a target, and I basically refused to get out of this trade unless it was going to be a scratch. It never got down to the day where I bought it again. And I've sat with it and I've sat with it. I took the most recent profit at 22.13. I'm still in this with a trailing stop. I actually think DBA could still turn out to be a big winner as we continue into this year. Now here's our 30-minute day. This had a huge 30-minute opening range right here, but I got in once it took out that opening range high. And as you can see, I stuck with the trade and I'm still with it. Now let's talk about wheat. Wheat's one of these trades that I just liked it, but I have to say that unfortunately and fortunately, when it comes to commodities trading, you often make the most money when things are really horrible for mankind. Drought, war. So obviously with Ukraine being a huge exporter of wheat, this became an explosive trade. I was just willing to sit with it for a while, thinking we were going to have drought here during the growing season in the United States, never anticipating, and this is why you always want to have some of your position, unless it's obvious that you don't want to lose money on your tail, going into what could be at any time, any given headline, turning something parabolic. And that's exactly what happened here. So we got in again once it broke the 50-day moving average. This was in September, last September, took a target here, and I just sat with this. I figured if it broke down under the 200-day moving average, I'd get out. It never did. Came back out, we took a target, another target, and then this explosion happened with the war, took another target, and once again, holding a tail on this trade. So again, I used a 30-minute opening range breakout on this day, September 24th, to get in. And like I said, I had a good risk. You want to give these commodities, especially these ETFs, because they're not pure futures trades, a wide enough berth to develop or to find out you're wrong, and a wide enough berth to have something explosive happen like what we just saw. So now, as I promised, I'm going to show you what my open positions are. This is as of today. So essentially, as part of my service, you get these, you get this type of screen where you can go to and you can see not only what we have when we got in, you get alerts when I sell, you get alerts when we change the stop, you get alerts when we actually get to a profit target. This is all that I have open right now. So we still have sugar from July 2020. I mean, if you want to know that how far back I've been thinking that we were going to get into a commodities rally, that's how far it goes back. I bought that in July at 587. Sugar today, cane closed at 962. So it's actually doubled in price at this point because it traded higher. And you can see I don't have much left. I'm up 63%. With wheat, up 42%. DBA, you can see we sold on 3.3, the quarter more of the position. Today, I decided to adjust the stop a little bit in silver, a little bit down. Here's my initial gold trade, and then my add on the gold trade, the floor trade that I made on 3.4, and the MP trade where we made back the money that I just showed you. So all of this right now is why I'm showing you this, is because I'm showing you that if you have a theme and you have a megatrend and you understand phases and you see the impact either for the modern family or against the modern family, then you know your risk reward and you know how to use average to range and you know how to use the opening range. You can have a really solid portfolio at a time when a lot of people, particularly institutional investors, mind you, are losing money or getting chopped up. So I just wanted to tell you a little bit. I actually got this today. You know, people are very happy that are in my service. You're doing fantastic in this market. Keep up the good work. This is from Floyd. And so, you know, I've been in the business a very long time. Like I said, this is my life. It's been a wonderful life. Certainly as a woman, I broke every barrier back in the day on the floor. I never even thought of myself as a woman on the floor. I just thought of myself as a trader on the floor. I mean, it was pretty obvious that I was different. I didn't have the loud voice that the guys had. I didn't have the large girth that a lot of the guys had. But nonetheless, that's why I learned how to chart, because it was more of a survival technique at that point. But I find these are big trend opportunities every day. That's what Charles Payne on Fox asked me, what do you see, Mish? What do you see? I never worry about the next big correction because we've made money. Even in 2020, we had a spectacular year in 2020. And I really enjoy not only building wealth myself, obviously, but helping other people build this type of wealth. So what we did was a couple of things. One is I have a course. It's a 6-week course called Mish's Ultimate Trading Program. So everything that I just told you in the span of 40 minutes, very quickly, you really get a full, like going to college. It's a college course from soup to nuts. Keith is a part of it. We describe everything from our big view to position sizing, to macro, to sector rotation, to the psychology of trading, and on and on. It really is a great way to get started if you want to just actually take a course. And then in terms of my service, you saw my model portfolio. I told you get your real-time alerts. Every night, Forrest and I, who's my assistant, we put out a daily analysis. We do 2 mentoring sessions per week, one which is live that I do every Thursday. We have the courses I just mentioned to you. That trade idea scanner, we give you a scanner that tells you when things are trading phases or changing phases, excuse me, so you can see what's going bullish, bearish, recuperation, etc. You get that real motion indicator I showed you, access to our big view, which is an amazing macro. Every week, by the way, we write a market outlook that gives you really kind of a rundown. I put that out on Twitter every week to see. That's free. We have a lot of support resources and we have a VIP Facebook group. So if you're interested, we don't believe one size fits all. I just told you about me, but we have lots of different services, from tools to courses to models that are algorithmic models that do the work for you, to my discretionary service. We thought that what would be great if you really were interested, at no obligation at all, to just have a conversation, you can call Rob Quinn. He's a great guy. Here's his number, 407-770-7637. You can also go here to marketgauge.com/ultimate. Gives you an idea about what I'm doing. We never pressure you to buy anything, but like I said, we have many different types of ways for you to take advantage, because everything that I just described to you is how we created our models and our tools, very much all about this consistent, repeatable, and tradable process. So I'm happy to take any questions there might be. How would I know there are questions? Would I look at this chat, David? Ah, here we go. No, that's from before, I guess, right? Are there any questions?
Oh yeah, one just came through from Joe. Where do you think a good point for Apple is to buy?
That's a good question. Well, Apple just released a whole new iPhone and AirPad. in a time when people right now are worrying about putting gas in their car and putting food on the table for their kids. So I thought their timing was a little bit odd on that, and might have been the first event that Tim Cook is going to have a little bit of egg on his face. However, with that said, even though all the other big tech stocks like Microsoft and Nvidia have, and AMD and Micron have all broken down under their 200-day moving average, Apple has not. Apple is still sitting above the 200-day moving average, but the momentum, that real motion indicator I showed you, is declining. So if Apple holds its 200 and its 50-week, so let's talk about the 150 to 154 area, major support. If it can hold that and the market starts to move back up, which today was actually an interesting day because it worked off a lot of loss from the morning, and actually with the transportation sector, as I showed you, the demand side of the economy may still be strong in spite of everything. Apple could probably get a benefit from that. So I would say, A, I would have to risk below 150 if I was getting in, and B, I would have to see Apple get through at least back over 163, 164, because that's really kind of the area it's been struggling through, and then see what happens from there. Good question. Any other questions?
JJ asked, where do you see the market going for the next few months?
Oh, now I can actually see the questions myself.
Oh.
Well, I think we're range bound. If you look at just historically, what happens in a stagflation environment, which is what we have a stagnating economy and inflation going higher. That's called stagflation. We haven't had stagflation since the 70s. 1970s. That's why when you're seeing numbers like the CPI and the PPI numbers going up to 40-year highs, guess what, 40 years ago, the last time that we had stagflation. So right now, what that means is we could be in this giant trading range. So if you're just looking at something like the SPY, for example, we had that peak low in February when the war first broke out. We're right now trading in a range between, let's say, 410 or 400 and 445. That can continue for a while, or we can break 445 and hit back up to 465, trade in that range for a while, or we can break 400 and go back down to like 350, 360. What my point is that I do not see a big move up, and I do not see a big crash. I see these sort of orderly sell-offs with a new range, or these orderly rallies with possibly then a sale from there. And that's why people are getting chopped up, because people have been trained since 2008. You buy every dip and everything goes to new highs. This is going to be a period where you really have to be patient and extremely, extremely disciplined. Is there any correlation between oil and travel stocks? Airlines rose yesterday as some oil stocks fell. Absolutely. But there's two things going on. And see, again, this is a very exciting time to be in the market as a student to learn, because if you can understand what's going on now with all these different relationships that have changed because of COVID. I mean, COVID added something that we've not seen, at least not in our lifetime, which is a basic pandemic that shut the economy down completely and put a lot of stimulus money in people's pockets at the same time. And interestingly enough, introduced them to the whole idea of retail trading. The retail business exploded during the pandemic. So you've got two things going on. You've got rising oil prices, which is going to create rising airline prices on one level, and lowering demand, of course, because people can't afford it. But at the same time, you have people who have not gone anywhere for 2 years, and they can't wait to get on a plane, even if it's domestically, to go somewhere. Whether it's, obviously people in this country are going to stay more in the Western hemisphere. I don't think people are going to be going to Europe too readily, not that people won't. So that could actually counteract the fall of the airline, the rise of the airline prices and the rise of the oil prices. So yes, there's a correlation, but the correlation has been somewhat skewed, which is why you have to look at everything right now on its own individual merit. Paper trading will not teach you anything, Valerie. I've got to tell you, paper trading does not give you how you're emotionally going to react to making money or losing money. The only way, I don't care if you trade 5 shares, and with commission-free trading, you can do that. Learn to see how your own emotional reaction is to trading. That's the only way you're going to learn how to trade. Because if you don't master your own emotions, which I didn't really get into today, but if you don't master your own emotion, if you don't detach from the outcome, and if you don't have a consistent strategy that you can go to sleep at night and go, even if I lose, I know it's controlled, then you really will never really understand what trading is. Paper trading does not give you that, because you know psychologically it's on paper. You have no real money out on the line. Do I think Jim Rogers' Elements RJA is as good as DBA for investing in the agricultural commodities? Well, I haven't really looked at that, but I can look at it right now because I happen to have my screens here. Well, let's take a look at his average daily volume on his particular ETF. He has spiked up to 800,000 shares a day, but today it closed with a volume of 182,000. Let's look at DBA. That's how I like to look at things. DBA has gone up to 8 million shares on the spiky days, and today, on a relatively slow day, traded 4.5 million shares. So what does that tell you? I like liquidity. I like to know that I'm trading something that trades in the millions as opposed to something that trades in a couple of 100,000 shares. So for me, that would be the way. Now, that's not to poo-poo what he's doing. Obviously, that's a good instrument. But for me, I like to go more with the conventional stuff. And yeah, I mean, really, it correlates very nicely to what's happening in DBA, though. Okay, let's see. Okay, thank you. Is there any other question here, or is that it? Okay, well, that's good. I'm glad there are no other questions. So there you go. You can find me on Twitter at Market Minute. You can go to marketgauge.com, see what we're doing. We got a lot of great free stuff there. And you can also email me. I'm always available, info@marketgauge.com. You can call Rob and just have a nice conversation with Rob just to see what we do. He's a really great guy, and he certainly is very well informed about all our products. And of course, you can stay tuned and watch me on the news. Next week, I'll be on Bloomberg and Fox and Yahoo Finance, a whole bunch of stations where I talk a lot about a lot of these things. So thank you guys so much. If there's no other questions, I guess that's a wrap, David. Thank you for having me today.